Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Teekay Tankers Limited, ticker symbol TNK. So Teekay Tankers has had quite the start to 2022 so far. Their stock price is up nearly 2.5 times, so they've more than doubled so far to start this year. At the time of recording today's video, they're trading for $25.09 per share. Year to date, their stock price is also up more than double. Over 3 years, they've compounded at a rate of 45% compounded annually. Over 5 years, that's more reasonable at a 15% compounded annual rate. Over 10 years, however, they're actually down. They've lost about 28% of their value overall during this time frame. And since they were publicly listed about 14 and a half years ago, their stock price is actually down 86%. So even though their stock price has done extremely well in recent years, it's coming in part because they were trading close to all-time lows and they have significantly rebounded from that. But they are still quite a long ways away from where they were publicly listed at nearly $170 per share. So Teekay Tankers is trading about $1 off of their 52-week high. Their 52-week low is $10 per share. A little over 3% of their shares outstanding are currently sold short, and they have about an $850 billion market cap. For some background about the business, Teekay Tankers Limited is a provider of marine services to the global oil and natural gas industries, and an operator of medium-sized oil tankers. As of the end of last year, the company owned and leased 48 double-hull oil tankers, time-chartered in 2 Aframax tankers, and 1 LR2 tanker. The company operates in 2 segments, tanker and ship-to-ship transfer. The vast majority of its revenues come from the tanker segment, which consists of crude oil and product tankers for different contracts. Teekay Tankers Limited was incorporated in 2007 and is headquartered in Hamilton, Canada. So for today's fundamental analysis, we're going to be performing a modified version of the 8-pillar analysis popularized by Everything Money, taking a look at 8 key financial metrics of Teekay Tankers business to come to a holistic and beginning understanding based on those fundamentals. So let's get right into it. Starting off here with pillar number 1, we want their average PE over the past 5 years to be below 22.5. So currently they're trading at a negative PE, meaning that they have negative earnings. Over this time frame, they've actually also averaged trading at a negative PE. So they trade at an average of negative 9 times earnings here. They had positive earnings for what looks to be all of 2020. However, in the rest of these years, that's all been negative. So this is going to be an X here to start off on pillar number 1. Pillar number 2, we want their average 5-year return on capital to be greater than 9%. So over the long run, over the course of decades, a stock is going to return approximately what its underlying business returns, and those business returns are going to be captured here by return on capital. So Teekay Tankers has only produced above average returns on capital in 2020. These other years, they have not done so hot. They had subpar returns on capital leading up to 2020, and in last year, they actually had negative returns on capital, meaning that they were destroying value by adding more money to their business. So overall, Teekay Tankers is producing about 3% returns on capital in an average year here, which is quite a bit below average. Those are pretty low returns on capital, and this is going to be our second X in a row here on pillar number 2. Pillar number 3, we're looking for 5-year revenue growth. This one's going to be our first check. In 2017, they had $431 million of revenue, and that has grown over this time frame. They hit a high of nearly $943 million of revenues in 2019, and that's come down a bit, but it's still higher than their 2017 number. In 2021, they brought in $542 million of revenue. We also want to check that their revenue declines aren't continuing, and actually if we scroll down and look at their trailing 12 months, their revenues have even picked back up to about $692 million. So it looks like their revenues are once again increasing off of their 2021 base. So that's another good sign here. Again, this is our first check here on pillar number 3. Pillar number 4, we're looking for 5-year net income growth. This one, unfortunately, is going to be an X. They had negative net incomes, again, in 3 out of these 5 years. Last year, they had their widest loss over this time frame. They lost nearly $242 million. So that's not a good sign here. We want companies that have positive earnings. So this is not a great sign to see here, and this is going to be an X on pillar number 4. So far through 4 pillars, we've got only 1 check. Next up, pillar number 5, we're looking for decreasing shares outstanding. Here they've actually increased their shares outstanding from 23 million in 2017 up to about 34 million in 2021. So this is going to be an X here. This is pretty bad dilution. Overall, this is 48% dilution. So this is not a good sign here as a long-term business owner. If you had been invested in this business for the last 5 years, your share of the company's profits has decreased by almost 50% here. So even though their stock price is higher, you're actually owning a smaller percentage of the company's total profits, which again is not good because this is a silent killer for investors. When you're purchasing a stock, what you're really buying is a fractional ownership percentage in that underlying business. So you are a business owner. When a business is going to be diluting shareholders like this by issuing more shares, they're decreasing your ownership percentage of the business, which again is ultimately going to decrease the percentage of the business's profits that you're going to be entitled to. So this is a very bad sign to see for long-term investors here in Teekay Tankers. Again, this is an X on pillar number 5. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It's this column here in green. Free cash flows are the lifeblood of any business, and a business's abilities to produce free cash flows discounted back by some reasonable interest rate are ultimately what that business is going to be worth. So free cash flow can be used to reinvest back into the business, make acquisitions, buy back shares, pay down debt, or pay dividends. In this case, Teekay Tankers has not grown their free cash flows. They produced about $75 million of free cash flow in 2017. Last year, they consumed about $129 million of free cash flow. In addition to that, they also had negative cash from operations, which is not good here. So they've only produced positive free cash flows in 3 out of these 5 years. In 2020, they did produce a pretty significant amount of free cash flows, especially relative to their overall market cap. However, in 2018 and especially this past year, they have not done well at all. So this is an X on pillar number 6. In an average year, really due to the high year in 2020 and these pretty stable years in 2017 and 2019, Teekay Tankers is producing about $74 million of free cash flow. We'll be using that on these next couple of pillars. So next up, pillar number 6, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5. So this is going to help us evaluate how the business utilizes leverage. At the end of last year, Teekay Tankers had $603 million of net debt, and when we multiply their average 5-year free cash flow of $74 million times 5, that's only going to bring us to $370 million. So this is going to be an X here on pillar number 7. The business is highly levered relative to their ability to produce free cash flows. So this might be a little skewed because their free cash flows were all over the place, and they actually did produce a lot of free cash flow in 2020. It just shows that this type of tanker business is highly cyclical in nature. The overall tanker shipping market has these extreme booms and busts similar to other global shipping markets. And so to be comfortable investing into this business, you really need to understand that industry inside and out and really understand what you're getting yourself into. Again, this is an X. The business is highly levered. Finally, the big pillar of them all, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20 to give us a reasonable starting point for evaluation of the business. So currently they have a market cap of $849 million. When we multiply their average 5-year free cash flow of $74 million times 20, that brings us all the way to $1.5 billion. So this is actually a huge check here. That's almost double what their market cap is. Just because this is a check on pillar number 8 does not mean that you're going to buy or sell this business. What this means is that you're going to want to consider doing more research into Teekay Tankers. One thing you need to do is decide whether a 5% average free cash flow yield is an appropriate valuation for this business. Valuing them at 20 times average free cash flow, especially in a cyclical business where it's hard to project that business's free cash flows, and especially due to the fact that they're earning very low returns on capital relative to average businesses, probably means that this business is going to either be in your too hard pile, or if you do understand the business, that it's going to deserve a lower valuation multiple overall. The other thing we want to take into consideration is their more realistic economic picture based on their total enterprise value. So this is going to be including the $600 million of net debt that they have. So their total economic value is the equivalent of if you bought this company as a private business. So when you're including the business's debts, suddenly this $1.4 billion to $1.5 billion comparison based on their average free cash flows looks a lot less undervalued and is a lot closer to a potential fair value for the business. Again, you're not going to be able to make that decision here. You're going to have to go out and do your own research into the business and decide for yourself whether that's reasonable for Teekay Tankers. Then finally, just to note, Teekay Tankers does not currently pay out a dividend. They did pay out dividends in 2017, but it's probably a good thing that they slashed their dividend, especially because they had negative free cash flows in 2 of the following subsequent years. And in the years that they did have positive free cash flows, their cash flows have been all over the place. And hopefully they've been allocating them to pay down some of this debt. So in summary, Teekay Tankers checks the box on 2 out of 8 pillars. Currently, they have a high-flying stock price. However, based on their financials, they're only growing revenues over this time frame, and their current stock price looks reasonable compared to their abilities to produce average free cash flows. However, the business operates in a highly cyclical industry, and in almost every metric concerning the company, we saw this cyclicality play out in their financials. Furthermore, the business is highly levered compared to their abilities to produce free cash flows. And over the last 5 years, they've diluted shareholders by about 50%. So there's a lot to be skeptical of here for Teekay Tankers, despite their high-flying recent stock price. So this type of analysis is a holistic beginning understanding of Teekay Tankers as a business. It is not financial advice and is not a buy or sell recommendation of any security. Before considering any investment, you need to make sure that you consult with the proper financial professionals and do your own homework researching a business. As a value investor, you should not be comfortable making an investment until you understand a company inside and out, just like a private business. Warren Buffett has actually said that to him, the stock market really doesn't matter. And the stock market really functions as a way to buy what otherwise would be private businesses for mispriced pricings. So having the attitude of being a business owner is an extremely important and extremely fundamental attitude to have. So with that said, that's it for today's fundamental analysis of Teekay Tankers Limited, ticker symbol TNK. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about Teekay Tankers with me today, and have a great day.